Welcome to this new episode of Your Next Trade called today Selling Volatility. In 2023, the market has experienced volatility crashing. If you look through the lenses of the VIX, now the VIX as of Thursday evening was trading below 13%. But we all know that on the third Friday of the month of September, there is the option expiry. That happened yesterday. For the S&P futures, that means at the opening at the close, and for stocks at the close, at the opening of the market, sorry. So now let's look at what Nomura is sharing with us, which is this very interesting table telling us, if you have been selling volatility in 2023, what have been the return. So I'm starting with the straddle that we have here, selling the daily at the money straddle. You will have been yielding year to date 10.5%. So anything here that is about selling volatility, which goes from selling the daily straddle, the long straddle, buying a 25 call, selling a 25 put, you have been making roughly double digits. So the market has been very much into selling volatility every single day. So now let's look at what happened yesterday when we started the option expiry day. So as of Thursday evening, and that's something that I do every morning before the opening of the market on the Discord community, is I will share with you guys, what is the implied move by the daily straddle on the S&P and on the Nasdaq 100. So what was the number as of yesterday? On Friday morning, it was plus or minus 0.5%. In other words, looking at the close on Thursday of the S&P through the SPY, which closed at 448.77, that implied a move of $2.24. So that means the lower band was 446.53 and the higher band in 451.1. What does that mean? That means that if you will be selling the at the money straddle, as long as the SPY, the S&P was staying between those two bands, which is the 446 and the 451, everything was fine. So now let's look at the Thursday close. The Thursday close, which was here, then we opened the market Friday, and very quickly we reached this 446.53. So what has been very true so far is if in 2023, most of the time, if you've been selling volatility, that will have been playing pretty well. But on Friday, after 1 hour of trading, very quickly we reached 446. And afterwards, we went lower. Why? Because people that were short those volatility need to catch up. And as you do have very low volatility, then the market sold off. So that is something that we're going to discuss even more today. But selling volatility, as has been the trade, where every single day people will be selling volatility and collecting the premium, as it was working very well. As a hedge fund manager, as a prop trader, I look at those trades with, not necessarily very good returns, and this is really something that I need to underline today. If you are making a bit of money, let's say you are making 0.1%, 0.2% every single day, your risk is for volatility to spike. So what we've seen in 2018, very similar strategies where people were selling volatility, it works until it doesn't, and when it doesn't, actually your fund, all your money will go down the toilet. And interestingly, on Thursday, there was a launch of an ETF, which is doing very similar strategy, which is, being long the market and in the meantime selling at the money straddle or selling 0 debt to expiry put, trying to collect those small premium. And again, if you do that, you might collect a bit of money every single day, and one day it's going to be awful. So I really strongly advise you not to do it, especially when the VIX is so low and implied volatility is at such a very low level. So let's look at the week-to-date asset performances, which was a very interesting week, because if you look at the blue here, most of the market, the equity market, stocks were up on the week, but not the US market. So the US market yesterday on the option expiry really underperformed the market, whereas in Europe we were roughly up 3% with the hopes that the ECB will be down and has been doing what we call a dovish hike. Overall, equity has been very strong. Dollar still strong, not as strong as the week before, but actually versus the euro we are at 1065, so and it's strong as well versus the Japanese yen. So I think we'll start to see headlines of how strong the dollar is, and not necessarily so that will be interesting to see on Wednesday what the FOMC to the Fed will be saying about the strong dollar. Similarly, I think the Biden administration might start to talk about, the strong dollar. And finally, if you think about companies, U.S. companies that are exporting, now the quarter-on-quarter numbers don't look very strong. Why? Because as the dollar it's that strong, it's going to be impacting the exports. Finally, I want to be looking at WTI, so something that we have been flagging. I mean, everyone has been flagging, so it's not like this is rocket science, but it's now trading above the $90. Similar story as before. Demand is now stronger, and the supply coming from especially the two of Russia and the Saudis have been coming down. So there is an imbalance. Roughly the imbalance is going to be between 2 to 3 million barrels in the following month. I think Saudi Arabia needs to be careful and not to have a WTI going through the roof, because that will impact demand. And then the prices could come down again. So I'm only going to be looking at the industry performance on the week to date. So what you see from this chart, if you look at the S&P here, you get a strong divergence between the losers and the winners. Okay, but I think what is very interesting as well is the recent winners, which have been cloud, the home builders, the semiconductors, and I'm talking year to date. So the leaders of this year have been struggling for this week. So that is something to watch out, especially the home builders. We're going to be discussing a bit later on. But huge divergence between winners and losers, and as well the winners, the recent winners that have been underperforming. What about the sector's performance? So IT really weak on the week, and on the other end of the spectrum, utilities pretty strong, despite yields staying at very high level. And as you can see, as the S&P is flattish, you see the divergence between the winners and the losers. So looking at the rates, so there is a lot of talks that the Fed, the ECB, most central banks will be down. But if you look through the 10 years, if you look at the week to date for the US now, we were up 7 bips, so 0.07%. So we are now at 4.33. That's the same with Germany, where we have been going up. Same with Italy. Same with Japan. So a bit of I think the pain trade for many market participants is to say, the central banks are done, and we could see actually the 10 years. If we see the 10 years going to from 4.30 to 5, or meaning the yields higher, I think that will be the pain trade, and I don't think the market is ready for that. Looking now through the Fed fund rates and what are the expectations. So we have the FOMC meeting on Wednesday, so the decision on Wednesday, more or less, market is expecting no change. It's going to be very interesting, as always, to listen to what Powell is going to say. What are the expectations? Do we have much of a change from one week to another? So not much of a change, but this is at the in 2024 that you start to see some changes. So probably the Fed is done for this hiking cycle, and maybe they're going to do another 25 bips. Again, this is what the market is pricing. And then we might see some cuts going into 2024. What about the VIX? So VIX, very interesting, as I said. So this is unfortunately, so I should have changed this one. So that was up. If I do that, you will see even better. So the VIX was on close on Thursday at below 13% and close as of yesterday above 13% at 13.8%. So we did have a spike in the VIX, the implied volatility. What is the main reason? Again, we went into Thursday and Friday morning going into option expiring, and as much of the time what happens is we have a big level on the S&P, we go into that level. When we start the day, then people can and have to change their positioning. So I'm going to go into technical analysis now in price action, starting with the S&P. So as I've been saying, you know, the trend it is trading in this trading range since October, which is a range that is going higher. Looking at some levels that we have, so you have this corridor, this range. You have two levels from the JP Morgan collar that is expiring at the end of this month, 42.10 and 46.65. Other than that, you are mid-range, and market is really looking for new catalysts. So kind of, you know, trading in small ranges for the last 10 days. For the Nasdaq, this is pretty much the same. We are struggling to be making new highs. The underperformers of the sector of the indexes, still the Russell. If you look at the Nasdaq versus the Russell, we have been consolidating for the week. If you look at the leaders, similar picture. Looking through the fangs versus the market, not making new highs. I think this one is interesting. So I look at the XLI, which is the industrial versus the S&P. So really has been struggling for the last few sessions. Why? Because I think the market is pricing not a strong economic cycle going forward, and that is an understatement. CL1, okay, so this is the one that we flagged above 90. You don't want WTI to go much higher. I think that will be bad news for stocks. I'm going to go into euro dollar. The trend is still the same. So euro was weak during the ECB conference. Why? Because the ECB actually downgraded their expectations of GDP for 2024 from 1.5 to 1%. So nothing really positive from the ECB, except that the market is pricing, as always, by the dip, and now we are going into the end of the hiking cycle, and the ECB will be much more accommodative. I think this is a mindset you need to be extremely careful, because before that you might see a strong deterioration of the economies. One that you need to be looking for the week is US dollar versus Japanese yen. Why? Because we are at 147, 148 roughly. We get the Bank of Japan decision on Friday. There is not much of expectations in terms of yields, but I think going forward, it is unsustainable for the Bank of Japan to stay where they are. Last time they intervened, it was around 151, 152. So you can see that for this week, that's going to be the play of the week. So going back into what happened for this week. So we started with the CPI. So the CPI was a bit higher than expected. Same with the PPI, but actually the market kind of said, you know, I'm fine with it. So not much of a reaction. Market did well. We got the ECB, which did on Thursday a dovish hike, which is more or less they increase the yield, sorry, by 25 bips, but in the meantime saying, you know, we are probably down. So the market liked it. If you look at the Euro stocks, if you look at the Stock 600, which is the two biggest indexes in Europe, they went up 2% very, very quickly. Retail sales in the US, so they were better. So they end up at the core retail sales at plus 0.2% month on month versus the expectations of minus 0.1. But actually, if you look at the revise came down a bit lower. So why am I looking at the core retail sales? Because as you do know, so I'm going to be doing a bit of macro. If you look at the GDP, how is the GDP made of? So this is here. The GDP, which is the gross domestic product, is made of four things. It's made of the consumption, the investment, the government expenditures, and the net exports. And if you look at the US GDP, 70%, 71% of the US GDP is made of consumption. That means, in other words, retail sales are very, very important. And the question mark has been so far how the US consumer can be so strong months after month. So there is a question mark, and I think this is something that discussed over and over. My view is in Q4, the US consumer will be really, really struggling. In other words, there is, to me, a strong chance that the US GDP will go into a recession in the next 2 quarters. So I will be extremely cautious. Really, if you want to better understand, this is something that we explain very well in the 4x4 video series, which is, how you construct the GDP, how you look at the GDP components for the different countries. So that was for the retail sales. We had the ARM IPO on Thursday, which is the SoftBank IPO, semiconductors, which was done at 51. The stock went a bit crazy at the close on Thursday and closed yesterday around 62 or 63. Finally, the option expiry. So this is the chart here of the S&P futures, as you can see. So a bit of volatility and going on Thursday. So Thursday was here. We had the pin to 4,500. Okay, so literally the biggest option open interest, on the options were at 4,500. That was not that big. Okay, but we managed to roughly go up by 1% on Thursday, and we opened literally on Friday at 4,500 roughly, and after that, very quickly the market sold off. Why? Because this is you don't have the market makers, market participants are repositioning themselves, and very often the VIX and the market and stocks will have funny moves around the option expiry, which happened yesterday. So the 4,500 magnet worked pretty well, and then so here this is for the S&P futures, and then we collapsed. Collapse is a big word, but we went down by 1%. Finally, looking at the something that I underlined, which is looking at the oil sector, looking at WTI, so the correlation. So here I'm taking the example of Total Energy, which is the French company listed in the US, and you see the correlation between total ADR and which is in white versus in orange the WTI. So this is very easy way to generate ideas, and obviously when you are trading those names, it's just a second derivative of WTI. So in terms of catalysts going forward, it's mostly about central banks. So we do have a lot of central banks. We get the biggest one of them all, which is on Wednesday, the FOMC rate decision. Expectations is for no change. That's going to be interesting with a press conference. Similar to the option expiry on Wednesday at the open, we get the VIX expiry. So as we had a bit of a bump on Friday, we need to check on how these VIX are going to be trading in the next few weeks, a few days, keeping in mind that really all this year has been about selling volatility. I think this is a game that plays until it doesn't, and when it doesn't, it might be very painful. Other central banks, we got the Bank of England, we got Norway, Sweden, and Swiss rate decision on Thursday, and a big one as well, the Bank of Japan on Friday. So that is for the central banks. In the meantime, we do have the flash PMIs on Friday, so that's going to be something to watch, especially because for just before the weekend. So what has been happening recently for the S&P? So this is here on the FOMC day. Over the last two meetings, actually the S&P didn't move, so flattish. So the market really is waiting, expecting new catalyst. That has been true for the last 3 months, and not much has been coming. So on one hand, there is probably, or my view is a recession is coming, and if not, no recession, meaning a soft landing, and the market could go much higher. So there are two camps fighting these days. So this bi-weekly straddle is not the right one. So you should be calculating it. And finally, I look for ID generation. As always, I'm looking at leaders for the market. So I've been flagging. Looking at the home builders in the US. So here, this is the chart of the home builders in the US. So I put some charts in the community trying to help you identify sectors, industries that could be turning or that could be leading. So this one has been very, very strong, and actually took a lot of short that lost a lot of money. So we had Lennar earnings that was on Thursday after the close that were, so the comments were not that great. So are we going to have a follow-up? At least, this is really something to keep an eye on, as we've seen for the week. Semiconductors, IT, home builders, anything that was the winner so far has been struggling. And that tells you that the market might be turning as well. So those are the things that I'll be looking for the week. As always, this is the catalyst that you want to identify for your trading plan. So this is it for me for the week. If you are interested in knowing more about my education, so there's the 4x4 video series. There is the mentoring, which is one-on-one sessions. We're going to be doing a group mentoring session in 2 weeks' time, where people that bought the 4x4 video series or have done the mentoring will be having a free mentoring group session. And finally, if you like what you've seen today, please subscribe to the channel or put a like, and I will be sharing ideas this week again on the Discord community that you can join for free. So this is it for me for the week. Have a good week. Very busy week with a lot of central banks coming. Again, Friday was a bit of a strange day, but not that much of a strange day, because at the end of the day, that was the option expiry OPEX, and very often and more the market is driven by these options. So you need to get better. We all need to get better in understanding those drivers. Bye-bye. See you next week.